Hello, this is Patrick White with your Thursday, July 9th morning market update. Overnight, we've got outside markets lightly lower here while mixed. We've got the S&P unchanged at 3,163.5. The Dow is down 52 points at 25,918. And the NASDAQ is still being led by the tech stocks here, and they're leading the charge up 50 points at 10,712. The stock market is seeing some indecision here as overnight Secretary of State Mike Pompeo said that the Chinese took incredibly aggressive action in its recent rift with India at their border here last month, where the Chinese captured and shot dozens of Indian soldiers. Traders fear that there could be sanctions coming from the U.S. and an escalation on the trade front due to this, but so far nothing has come to fruition. It's just fear at this point. Traders are signaling that the uptrend is still in effect for stocks overall, as the September S&P is staying above that 3130 to 3150 level at this time, and looking to challenge that 3,220 point swing high for the move at some point here soon. Grain markets here overnight are higher despite some spotty rains heading across the Midwest here overnight. December corn here is up 6 cents here at 360 even. November soybeans are up 8 3/4 cents at 906 here even. Corn has found buyers here overnight as traders are concerned over the extreme heat forecasted for the next 2 weeks, and that coincides with the time when most of the corn pollination will happen for the Midwest. As mentioned before, there have been rains overnight with eastern Nebraska and eastern Kansas seeing the largest benefit. Rain coverage outside of those areas is expected to be spotty elsewhere today. Traders will really be watching just how much rain coverage we get here this week to determine how much they want to buy going forward. They'll also be watching that heat forecast for that pollination time over the next 2 weeks, 10 days time frame. So the longer out term still looks hot and dry at this point. Soybeans are seeing some good size buying in here overnight. The November contract went down and found buyers at the 895 level yesterday, and so far that's been where our bounce has originated from. The rally has been from the hot and dry weather here forecasted longer term. Traders are looking to add to their already long positions here as the threat from bad weather is still real. When you look at the balance sheet and keeping all the demand figures constant, seeing just a 2.3 bushel drop from a trend line yield down to 47.5 bushels to the acre for soybeans would send our carryout below 200 million bushels, and I would think that would certainly shock the market here considering where we've been recently, and I would think that would probably start some rationing. Just an example of how fast yield, just a little bit of a deviation in yield could take the soybean supply, the soybean buffer away, due to just the lower acres year over year, and just the fact that there's not as many soybeans per acre, things like that. So, however, though, we did see some buying in here overnight, but I do question just how far we can go here ahead of the WASDE report on Friday. So far for November, beans, the top of the range has been 912, and that's been the high for the range near term. And I think we're going to stay in beside this 895 to 912 region before we hear from the WASDE. So that's all I've got for today, guys. Have a productive day out there and stay dry. Remember that there is significant risk in trading futures and options, and it is not suitable for all investors. For more information on commodity markets, give us a call at 712-262-7606.